Welcome to Markets Now. I'm Michelle Rook along with Scott Varilek with Kooima Varilek, and we're hiring everything but the wheat market right now. And I want to start off with soybeans and the corn market, but in particular soybeans, Scott, because we're back above 15.15. That was about 50% retracement on the soybeans. So we're recovering, but can we continue to see that recovery here kind of pushed with the meal market going higher?
Yeah, it feels that way. Thanks for having me, by the way. But the beans acting a little bit stronger than the rest of the grain market. I think there's quite a few reasons. You mentioned the soybean meal. Even on some of those days when we were seeing pretty strong liquidation across the grain market, soybean meal was anticipated that maybe the funds even had some interest to actually add some length there rather than try to excuse me, dive out of some of those positions. And beans are just acting pretty resilient. I think they're feeling like they're getting the shaft, maybe as we talk about acreage coming up. That's going to be the big story in the, excuse me, the end of March. So I think these beans trying to hang on strong, trying to dangle that carrot just a little bit, saying, hey, don't forget about us. All you guys that really like to plant corn, we'd like some bean acres too. So.
Well, that and the fact that Argentina's crop ratings down again yesterday, the poor-to-poor category increased. And so I think the idea here is that we're going to have to see a little bit lower production figure even yet in Argentina, maybe even sub 30 million metric tons or what?
It could ding Argentina a little bit. We just have to remember that they're third on the list of world soybean production, and they're quite a ways back, I guess, from for sure Brazil, the top dog, and us as well. So they don't make up such a large part of the soybeans.
No, but they're the number one meal market, remember?
Yeah, so. They are that, but I still, excuse me, battling a little cough here. But so I think that's part of it. I just don't know that that's the big flagship carrier story to me. So I feel like that got a little bit overtraded, in my opinion, as we're going to see some pretty big numbers coming out of Brazil there. So we're always going to be arm wrestling that. But I personally think we're starting to put some of that South America news aside as we're going to start focusing on what's going on here as harvest is going on down there. The shift happens usually right here in March as we start to look at what we're going to do here.
Yeah, and in new crop, it looks to me like beans really need to buy some acres. Corn has felt a little more comfortable, especially after the Ag Outlook Forum, even though those are theoretical numbers. But corn, how much more retracement do you think we're going to see there? Where's 50% retracement? And our high today, are we kind of into a resistance area there?
Yeah, I got very smashed last week, and the chart looked pretty horrible. We saw a lot of technical weakness. We saw a lot of funds puking positions and escalated rather quickly, as sharp as that break was. So found itself a little bit oversold after a very swift break, and now it's kind of on the recovery. Some of the charts were pointing even lower yet as it had broke a lot of support lines, and gap in the July chart at 595. You started to wonder if they were gunning for that, but a lot of the basis is still staying pretty strong. The demand picture really did not change. So getting a little bit of recovery here. You're finding some of these end users interested in trying to buy some of this lower corn and not ignoring the cheaper prices. So a halfway retracement would be 550 on the May corn, or 552, kind of a range. So I think that's definitely in the picture that of something that could happen. We weren't going to be able to see a spring rally from where we were hanging out in the upper sixes, and it just didn't have the story to really say, okay, we've got growing conditions problems here, that those kind of stories aren't going to happen here for another month or two. So finding its way back, I think it can grind, maybe through the month of March here till we kind of get to some of that acreage report numbers. So feeling okay about it. I still think it can recover a little bit further from here.
The pullback in corn obviously has helped push feeders into contract highs. We're seeing it again today, despite the fact that corn's a little stronger. But the market in terms of live cattle futures, we put a bit of reversal in here 2 days ago, but it looks like the fundamentals, including strong cash, are pulling us back up into those areas again.
Yep, the bulls are still running around in the pen in the
buying on the breaks,
cattle market. So that's for sure. Every break that happens, it's you can have that little eerie thought that it is a seasonal time for it to put in a high when you see a break, but continue to grow that open interest. We continue to see buyers coming in and trying to buy those breaks. So strong interest there to try to stay on the long side as we see those breaks. It's viewed as a buying opportunity so far. and the fundamentals are holding on. I mean, we're knowing that, yeah, there's maybe, a nice amount of cattle in front of us now. I won't say an overabundance, certainly not that. We're going to be tighter throughout the year and especially into that fourth quarter. So what lies ahead is still the main driver, just the tight numbers overall. And we've got a grilling season coming up. It feels like packers might be a little bit closer to the knife than they want to let on. There's a lot of interest in the cattle. It just seems like the way that we trade cash is a little bit tougher. It's you hear of some good bids. Maybe they're not up and down the road for everybody, as you see some 165 in the north and in the south as well this week so far. So pretty good prices. It's just not everybody's getting. If you've got some outside cattle that are muddy, you're certainly going to probably have a tougher time getting a live bid. You're going to look at some of more of those meat bids as well. And it's been a tough winter on the live cattle. We're going to probably continue to see the weights break, these carcass weights, and hearing some of my Nebraska customers saying, yeah, we're well off of where we probably should have been, 100 pounds or more, where they probably could have been just with the weather that we've had. And we're still looking at more weather for next week. And I think that's part of the reason they're throwing a little premium on them today as well.
So a little weather premium. Cash trade you mentioned has been higher in the north. Where's the volume been, and have we seen much in the south here for volume? It's been pretty light.
It kind of feels light both north and south, in my opinion. Just the news wires are a little bit quiet. We're having to search around and find it a little bit harder, and that's something we're going to have to get used to in the live cattle market in the future. Is there's just a lot of less negotiated cash trade that actually happens, but the trucks are moving. Cattle are wanted to the packers, so some of the corporate feed yards are really finding it pretty easy to keep these cattle moving. So I think we're going to continue to stay strong. I don't see a lot of break in this market right now. I think the boxes are acting fairly strong. We've still got grilling season ahead of us. We keep talking about outside markets and what the health of the consumer is. I think that's the overall risk to that demand. Are we going to see this recession that we've talked about for the last 2 years or not? What kind of status do we have from that standpoint? But all signs are feeling good, and seeing some more contract ties on some of those months. I think that can continue to be a theme for a while.
And the hog market continues to see kind of like two steps forward, one step back. We just can't really get any momentum to the upside. Is that because the number situation is continuing to grow and that's kind of keeping a lid here on the cash and the cutouts, or what's the main problem yet?
Yeah, hogs are sputtering, looking for major direction, I guess, and unable to find it. Seasonally, it's not a time of year that you're worried about a large break. We can usually see a little bit of a rally as we see some tighter numbers here, and we have some summer months that are over $1. So I mean, ultimately, that is a good price there, but it feels like we've got the weights under control. That's on their side. I think there's a large crowd that's thinking this hog market really needs to rally from here, just not able to find any major traction and get off the ground and go. Every time it does, it takes its 2 steps back, and we're kind of back to square one. So I don't know that I want to throw the comparison out there. I have a lot of people asking, okay, well, beef's this high, why can't pork be this high? And I think there's not as much of a tie there as one would want to give it credit for. Yes, I understand that statement, but it's just not carrying a lot of weight, as the consumers are wanting that beef, wanting the high quality. So I don't really want to throw that comparison in there and try to stand on that.
Gotcha. All right. Thanks. As always, good to see you. Scott Varilek with Kooima Varilek, and that is Markets Now.